Lecture 6, Tax Research. In this lecture, we talk about tax planning concept and tax research goals, challenges. And we talk about the database. Then we're going to discuss the primary tax authorities and also tax research processes. Right? First, tax planning. Tax planning, right? It analyzes a proposed transactions from the tax perspective. Basically, we need to understand the tax implications for all your financial decisions. And sometimes we seek, professional help to make better decisions, right? Basically, try to minimize the tax burden. Tax planning is often referred to as open fact engagement because not all of the relevant facts have occurred. Right? In other words, we need to carefully plan and control the fact that actually occur in order to produce the best after-tax results for us. Although the goal is often to reduce taxes, but risk tolerance is also an important fact to consider. Right? We don't want to take too much risk. And aggressive tax planning often takes advantage of the tax or legal loopholes, but we don't want to discuss that. All right. So the typical tax planning tactics include, for example, we may change the tax jurisdictions. Right, for example, companies move headquarters from one state to the other state, from one country to the other countries. Those are the tactics they use to basically to change the tax jurisdictions to a place with low tax rate. Okay, we may control the character of income. For example, we may plan to convert some of the income from ordinary income into income qualifying for low tax rate, such as long-term capital gains. We may also spread income among related parties. We can change the timing of purchase or expenditures to lower taxes. And finally, we can maximize deductions or credit. International tax planning, adds additional complexities. We have some places in the world called the tax havens, right? Those are the countries or territories with little taxes. For example, we have the Cayman Island. Right, so we do not discuss, international tax research in this lecture. There are two types of tax research. We have the applied tax research, also known as professional tax research. It's an examination of all relevant tax laws given the fact of a client's situations in order to determine the appropriate tax consequences. In other words, how to legally help clients to avoid tax. However, we need to help client balance the tax avoidance and risk-taking. And we try to minimize their potential disputes with the IFR, Internal Revenue Service. The other type of research is academic tax research. Basically, we use empirical and behavioral tax researches to study the policy-oriented topics. And this is for the society at large. Occasionally, it could be theoretical research. And typically, these researches are conducted by academics, government agencies, or think tanks. And in this lecture, we focus on the applied tax research, or professional tax research. As we have learned that there's always a trade-off between the after-tax return and risk-taking, right? The lowest tax burden may not always be the best result. So tax researchers must be aware of the difference between tax evasion and tax avoidance. Typically, tax evasion, it's about illegal acts. Okay, illegal acts. Right, when we minimize tax legally, it's called tax avoidance. Sometimes we have abusive tax avoidance. And sometimes taxpayers may use tax shelters, right, or invest in transactions that are intentionally being used to misapply the tax laws. And these activities are targeted now by RIS, and they call this abusive tax avoidance. Okay, in this lecture, okay, our tax research are focused on the tax avoidance, okay, the normal tax avoidance. So 3 types of activities involve tax research. We have tax compliance, tax planning, and tax litigation. Basically, tax compliance, we help clients complete tax returns, right, including the federal, state, and local returns. And we may help client finish tax accountings and preparation of tax footnote in the financial statement. And we often call this closed fact engagement because all facts have already occurred. Right, we talk about tax planning research already. And the third type of research is tax litigation. Right, it's kind of research we need after client was targeted by RS or being audited. And often, and also when in court. Right? When in court, it will be handled by lawyers. Tax research challenges. First, determine the relevant factor. Many tax disputes involve questions about determining the facts rather than the law. For example, there are 2 common factual disputes. The fair value, right, of the property and the amount of deductible business expenses incurred. Do not rush into the search for legal authorities. Okay, we need to understand the relevant facts and issues of the problem first. And relevant facts are those that make a difference in how the law is applied. And we also have the colorable facts, or those that only some people consider relevant. And here, when we determine the facts, we have to include, right, from 2 perspectives, from the taxpayer's perspective and the RIS positions. Because sometimes it's the facts you don't think it's relevant, but it's IRS think it's relevant. Right, after determining the facts and issues, right, we need to go for the relevant legal authorities. We often face challenges for tax research. Right, typically there more than one answer may exist in the tax authorities, and we need to apply the law to the facts to determine the tax consequences of each of those situations, right? And they need to inform client of the different options they have. Right, tax professionals must have a good faith, believe that the tax return positions has a realistic possibility. Okay, However, a client may have a position that they don't like IRS audit. Then our advice may be a different. We can recommend a tax position that it's going to justify for that position. Try to minimize the chance of being audited by IRS. Right, if the client, do not disclose their underlying positions, and we have to adopt the so-called substantial authority positions. That is, we try to avoid the potential penalties in this case. And we have to carefully determine the line between the defensible tax positions and that one is not defensible. And typically that's kind of difficult. It requires a lot of experiences in this and the professional judgment. The cutoff line is not clear. However, the basic requirement is that we should have the evidence that should support winning the client's cases in majority of the instances, right? In recent years, the accuracy-related penalties under the Internal Revenue Code, right, 6662B1 and 2 is most litigated tax issues. Right, basically, if your actual tax is over 20% of your current tax payment, right, the Internal Revenue Service, they're gonna give you a penalty. Oh, that's 20% of penalty on your underpayment. Okay, that 20% penalty on your payment if you underpay, and sometimes it could be 40% penalties if you have underpay or hidden foreign transactions. Right, tax research database. Tax research database include both primary and secondary authorities. Right, about the primary tax authorities, the two strongest and typically most used are the code, or the Internal Revenue Code, and the Treasury regulations. And the secondary authorities, for example, could be integrated of all kind of code regulations into a publisher's tax research database. That could be a secondary authorities. For example, the tax services is one of the secondary authorities. Right, we also have many alternative sources which reprint the tax law. Right, for example, we have legal databases such as LexisNexis and Westlaw, and we briefly talk about those databases in last lecture. And we also have specialized tax database. Right, the Checkpoint H is one of the typically used tax database. It's from the Thomson Reuters. Right, the CCH, the Commerce Clearing House, is another options for their specialized tax database. Next, let's discuss the primary tax authorities. The primary tax authorities are typically created by three areas of government: by Congress, the executive branch, and the courts. All right, so let's discuss the hierarchy of tax law. First, we have the statutory law. Statutory law is the law passed by the legislative branch, the Congress, and normally signed by the President. Right, for example, we have the Internal Revenue Code, also known as a code, right, the U.S. Constitution, and the tax treaties. Okay, those are statutory law. The next level is administrative regulations. After Congress enacted tax law, right? The executive branch may interpret it and enforce it. Then we have the administration regulations. Right, for example, the Treasury will create the Treasury regulations. Right, Treasury regulations provide the general guidance that interpret and clarify the statutory law. The Internal Revenue Service, it's a division of the Treasury, issues lesser administrative authorities. For example, the revenue ruling and revenue procedures, right, through its audits and adjustment to the taxpayers, self-reported tax liabilities. The next level is judicial law, which interpret codes and regulations, right? Judicial cases, decisions, a law in common law countries, such as United States. Right, so this is a hierarchy of tax law. So let's discuss them one by one. First, the code. The code is also known as Internal Revenue Code. It is the statutory foundation of all federal tax authorities. Right, the official name is the Internal Revenue Code of 1986 as amended, and it could be found in the Title 26 of the U.S. Code. Alright, so what is U.S. Code? Right, the U.S. Code is United States Code. Basically, it's a compilation of general and permanent federal laws of the United States, organized by subject. It has 54 titles, and the Internal Revenue Code is number 26. Okay, and the U.S. Code is different from the Code of Federal Regulations because the Code of Federal Regulations is issued by the executive agencies. Okay, the U.S. Code is updated annually and in a cumulative way. Yeah, so we're gonna check every year. We have updated version of the U.S. Code if there's a new law signed. Right, we have a link to U.S. Code Title 26, the Internal Revenue Code, and within the code, it's ranged by sections. So let's go to 26, Title 26. Okay, here we are, Title 26. Right, Title 26, Internal Revenue Code. So within the code, we're gonna check sections. With this, sections are uniquely numbered. Okay, so let's take a look at the website to check. Okay, so yes, we have 9,834 sections. Okay, and for reading purposes, it's we have title, subtitle. Okay, but let's find out section 11. Okay, that's right here, income tax. Okay, and chapter 1. Okay, let's check determination of tax liabilities. Okay, and go further. All right, here we have section 11 to 12 are for tax on corporations. Right, so section 11 is tax imposed, and we can read the text or have a PDF version. Let's see PDF version. All right, so we have a PDF versions. Section 11, tax imposed. All right. So if we have the section numbers, we can quickly find the content, and citation approach can access quickly. Right. Then a section is divided into subsections, paragraphs, subparagraph, clauses. So we need to cite as specific as possible within a section. Let's see, section 132, right? Subsections C, right? Paragraph 2, subparagraph A, and a clause. All right, so let's find out what is about. All right, let's find section 132. All right, computation of taxable income. Right, it's right here. Items specifically excluded from gross income. All right, it's right here. Certain fringe benefit. Open it. Right, so we're gonna find we find a section 132, and how about the subsection C? All right, A, B, C. Okay, qualifying employee discount defined, and we find paragraph 2, the gross profit percentage. Then find the subparagraph A, right, in general, and then the clause number 2. Right, this is what we need to find: the aggregate sales price of such property. Right, this is what has been cited. All right, so that's how we cite, the code. Right, we always read subsection A carefully, because this is summarizes important issues, and scan other subsection for relevancy. If another code section is referenced in a relevant part, okay, we need to examine that other section as well. Right, for example, the section 132, certain fringe benefit, and the subsection A is summarizes or exclusion from the gross income rights. Those are important issues. All right, that's a code. And the blue book. The blue book, officially it's known as Report by the Staff of the Joint Committee on Taxation. Right, it's a non-partisan publications, basically that provides analysis, explanations of tax legislations for the U.S. Congress. Right, it explains changes in proposed legislation passed by both the House and the Senator. Usually, it's explanations of those changes, while it's often published after the bill is signed into law. And these explanations, these reports are often influential in determining legislative intent, and often is provide a basis for future Treasury regulations interpreting the code. Right, however, the Blue Book is not a primary tax authority. It's a secondary source. Okay, it's a secondary source. Tax services. Tax services are also secondary sources. It's a comprehensive set of multi-volume books. It's edited, basically. It's organized either topically or by the code section numbers. Okay, so it's easy to read and to use, but it's a secondary source. Sometimes it includes parts of the Blue Book as well. A more comprehensive is annotated tax services. Those are organized by code section numbers and provide short annotations on cases and sometimes revenue rulings that interpret that code sections. So it's more comprehensive. And the CCHs, right? And we can find all those things in the commercial database like CCH and Thomson Reuters, the United States Tax Reporter. Gonna give those annotated tax services. But again, they are secondary sources. All right, so these are statutory levels. Let's move down to the administration levels. administration authorities. Now, once a law is signed, the administration, right? Well, the executive branch basically will implement it by interpreting the law and enforcing the law. Right? Typically, the administration authorities, right, will cite or reference the code, a particular code. It's based on particular code. Right? For example, the Treasury Department create Treasury regulations, also known as a reg. Right? It interpret and clarify the statutory code. The RS division of the Treasury Department also create lesser authorities and enforces the tax laws. Let's talk about the Treasury regulations, or the reg. Right, we have three types of Treasury regulations. We have a proposed regulations. It's a trial balloons. It's not an authority. We have the temporary regulation. There's no public hearings, but it has been there, and it's legally binding, okay? But it will expire in 3 years. And we have the final regs, the final Treasury regulations. Those are the one that goes through the public hearing processes, and it's legally binding. Okay, must follow the regulations or penalty exists. That's a final regulation. But there are two types of final regulations: legislative or interpretive. Legislative regulations, right? Sometimes the code, the Internal Revenue Code, may direct the Secretary of the Treasury to create regulations to carry out the purpose of that section, so that we have legislative regulations, okay? And we also have the interpretive regulations. Those are also required by the code that provides a Treasury Department Secretary, right, and asks them to prescribe all needful rules and regulations for the enforcement of the title. So that's interpretive regulations. Okay, so both type of regulations are equally important. Okay, they're equal in weight of authorities. The Treasury regulations are available at the Code of Federal Regulations. So the Title 26 of Code of Federal Regulations, it's about internal revenues. So here we have the interpretation of Internal Revenue Code. Right, let's see how the Treasury regulations are cited. Right, start with identification as regulations. So it's either the Code of Federal Regulations 26, okay, or just the Treasury regulations sections. And then we followed by part numbers, part 1. And part 1 typically it's about income taxes. All right, then we have these applicable code sections. So these Treasury regulations interpret the IR, Internal Revenue Code 274, okay? Applicable code sections. And then hyphen number 2, this is the second interpretations issued related to this code section. And we have a subdivision, okay, within the regulations, G. Let's see if we can find it. Okay, part 1. All right, income tax, okay. Then we're going to find the section A lot of sections. Two, 7, 4. All right, you're right here. 274 hyphen 2. Okay. Here we have. And hyphen 2 G. This is what we want to cite. So let's see. What is this? All right, and here we have it. Okay. G. Additional provisions of section 274. Travel of spouse, dependent, or others. All right, so this is how we cite and use the citation to identify the document. All right. And the Internal Revenue Service also issue the revenue ruling and revenue procedures. Right, the revenue rulings are issued by IRS. Typically, it applies the law to a specific set of facts. So unlike the general guidance provided in the Treasury regulations, right, these revenue rulings provide issued fact and law and analysis on applying the law into a particular set of facts. Right, the citation to the revenue ruling does not reference the code sections, but some publishers add that information, so that's easy to read. The revenue rulings are issued by the IRS and represent the position that IRS revenue agents must follow in auditing tax returns. Then we have the revenue procedures. Revenue procedures are created by the IRS to announce administrative procedures that taxpayers must follow. So it's cited in a similar manner as a revenue ruling, so it's cited as revenue procedures, right? Revenue procedures. So these are binding on either IRS, the agents, or the taxpayers, but they're not in courts, okay? Not in courts. Some of the less administrative authorities are from the IRS. For example, the IRS actions on decisions. Right, basically, these are the formal memorandum prepared by the IRS that announces its future litigation position, right, with regard to the court decision addressed by the action on decisions. So basically, right, we're going to follow the court opinions in the future litigation. Right? Announcement, it's a public pronouncement with short-term values, for example, right? Extension of time to file tax return. That's announcement. We have the chief counsel advices, or these are written advices or instructions and sent to the IRS employees, right? And the Internal Revenue Manual. So this is the guidelines basically for the operation administration of IRS. Right, the forms and publications are written to assist the taxpayer compliance with the law. We have the private letter ruling. Private letter rulings issued on the proposed transactions. It's basically a written statement by IRS in response to a request by a particular taxpayer concerning the tax consequences of a particular transaction. Right? So the private letter ruling cannot be used by other taxpayers. So it's as a precedent. So you cannot serve as a precedent. While others publication by IRS are technical advice memorandums and IRS notices. You can take a look at that as well. All right. Right. Let's talk about the judicial sources. Okay, judicial sources. These are the court decisions interpreting the code and the regulations. Remember, here the court has a final say regarding what the code words really mean. And most cases can serve as a judicial precedent. It means the court will follow prior cases' holdings. Right, to conducting a research, right, one need to have a knowledge of judicial concept, the various federal courts and the hierarchy. Right, under the hierarchy, the Supreme Court is the highest court, and the second or highest court will be the Courts of Appeal. And we have the three different alternative trial courts. They are tax court, district court, and the Court of Federal Claims. Okay, this hierarchy determines whether a case is precedent. So Supreme Court decisions on the issue is precedent for all courts as long as the statutes remain unchanged. So sometimes the taxpayer have to argue in a narrow application of court's holdings, try to avoid, distinguish the unfavorable precedent. So this case is different. This case is different. And then the Courts of Appeal decisions provide precedent for all cases in their respective circuits. Okay, and the decisions of other circuit courts, they are not decisive, they are merely influential. Right, U.S. Tax Court. U.S. Tax Court is a specialized court considering only tax cases. What's the advantage to go to the tax court? Right? The tax court has various official judges. They are highly knowledgeable in tax, and mostly likely tax lawyers, and the majority of those cases will be resolved or dismissed without a ruling on. And another important advantage is there's no prepayment of the disputed amount. Okay, you don't have to prepay. Other trial court consider only refund. You have to pay, go to the trial. If you win, you have the refund. Okay. And then the Goldsman's rule says within each circuit, the tax court will only follow the precedent of that court of appeals. All right. So that's U.S. Tax Court. There are two types of tax court decisions. First is regular decisions, right? It's basically chief judges is going to decide if a new legal principle is announced in the law, okay? And there's also memorandum decisions. So it's basically it's going to apply already announced principles to a different set of cases, to a different set of facts. So many taxpayers use a tax court to litigate the IRS audit adjustment. The IRS will issue either a quiescence or a non-acquiescence for most tax court regular decisions that IRS has lost. So if it's a quiescence, right, it means the IRS will follow the court's decision in similar cases in the future. But this does not apply to either memorandum decisions or decisions by any other courts. Right, these announcements are published by the IRS in the Internal Revenue Bulletin or the Accumulated Bulletin. The tax court judicial processes, after petition the IFRS office and chief counsel files an answer, The counsel refers to the case to the appeals for settlement considerations. If the taxpayer and appeals do not resolve the case, it is returned to the counsel for their settlement. Alright, so that's a typical basic information about U.S. tax court. Alright, so let's moving up to the U.S. Court of Appeals. Right, both the taxpayer and IRS can appeal tax court and the district court decisions to the relevant regional court of appeals. Right, the Court of Appeals considers only the application of the law, not determining the facts. So the facts has been determined lower levels already. So they're going to consider the application of the law. Right, there are 13 Court of Appeals, 11 regional, plus a DC one, and then federal ones. I have to citation must identify the specific court. Okay, and a district court must follow precedents set by the relevant circuit court. All right, and U.S. Supreme Court. U.S. Supreme Court reviews few cases involve tax issues because it hears the cases only if it grants a writ of certiorari. With certiorari means that the high court is going to order the low court to send a case up for review if it has important significance in social importance or whatever. So all court must follow the precedent from the U.S. Supreme Court. Okay. However, the U.S. Congress can overturn the decisions by passing a new statutory law. So they're going to change everything. Right, steps in conducting tax research is similar to other accounting audit research. First, we're gonna investigate the facts, right? Identify issues. Right, the advisor must acquire all facts and identify the relevant legal issues. And the new information helps to acquire newer or more refined issues. Right, the next step is to collect appropriate tax authorities. Right, with issues and the authorities, step 3 is to analyze the research. Right, to go with the code, it's the strongest authorities. Right, the next level is Treasury regulations. Right. Supreme Court decisions, right, and all other court decisions can be influential. Right, metadatabase offers citators, enables researchers to check the subsequent decisions referencing a case and the case histories. Right, and step 4 is to develop the reasoning and conclusions. To start with a code section or subsections, right? You're going to organize the discussions, including memos, reasonings, and then document any research findings and the conclusion. Right, the step 5 is to communicate results. The tax research memo is highly structured, okay, and it's very specific and has a very detailed requirement. For these reasons, we're not going to ask you to write a formal tax research memo, but however, keep in mind and you need to understand what is included in a tax research memo. Right, for example, use subheadings for facts, issues, conclusions, and reasonings. Right, and reasonings include discussion relevant laws and applying the law. Right, and reasoning sometimes divided into 2 sections: discussion of the law and applications. Right, think about logical order of communicate. Generally, code and the Treasury Reg go first. Right, because they are the strongest authorities than cases. So what are the relevant professional standards? We have 4 new standards. Yeah, these standards are from the AICPA. AICPA. That's a statement on standards for tax service, right? The standards, the statement on standards for tax service. Number one is general standards. Number two is standards for members providing tax compliance service, right? Basically, it's a tax return, right? And number three, standards for members providing tax consulting service. And number four is for providing tax representation services. Right, so these standards are available in the AICPA website. You can check resources standards and search tax standards. It should be there for AICPA. The IRS Circular 230. It's by the Treasury Department. It governs who can practice before the IRS. Right, basically we're talking about the CPAs, attorneys, right, or enrolled agents, right? They provide enforceable rules of conduct and provide strict standards on any written tax advices on potential legally questionable tax shelters. So the CPAs, lawyers, and enrolled agents must follow these rules, right? Right, we talk about AICPA's standards, the statement of standards for tax services, and we have tax return prepare penalties, right? We talk about the code section 1694 penalties. So if you underpay, you have a subject 20%, 40%, or even more penalties, right? Most penalties are civil penalties, and some will be criminal penalties.